Hey guys, welcome back. You guys ever seen these YouTubers that are out there, these finance YouTubers? They all got this video saying it's hard to get to 100K and it's easy to get to 1 million, right? And then they got this exponential curve graph, and then they got this little point at the 100K mark where it's really hard, and then it's really easy up at the top, right? They got this exponential curve. I just find that kind of funny, to be honest. If it was easy to go from 100K to $1 million, well, no one would have invested with Bernie Madoff, would they have? Right? No one would have invested with Lehman Brothers if it was easy, right? Why wouldn't they have all just put their money in the S&P 500 if it was easy, right? It's because the S&P 500 doesn't have an exponential curve from 100K to 1 million, okay? That curve is not exponential. Yes, it's compound growth if you invest in the S&P 500, but it's not easy, and it's gonna take a long time. It is not quick and easy like everyone says, okay? So that's one thing to note. It's not easy above 100K to get to 1 million, okay? What's another reason why it's not easy? Well, you're dealing with a larger sum of money, right? How are you gonna deal with investing when you're sitting on, let's say, 500,000 in the S&P 500? Can you take that kind of volatility, right? Now, let's compare that, right? Let's compare someone who holds 500,000 in the market, and let's compare someone who holds $10,000 in the market. Now, someone who holds 500,000, they've probably got a fair amount of liabilities in their life. When you're at 500K, you may have kids, you may have a big house, a big mortgage. Maybe you've got some auto loans out there, you're driving some fancy cars maybe, who knows, right? There could be a lot of reasons why you have a lot of liabilities at 500K, right? And at 500,000, are you gonna be sticking all your money in the riskiest stocks, right? To get that exponential curve that's so easy, right? You're gonna get that exponential curve, right? It's so easy, right? You just throw 500K into a small cap, risky stock like maybe SoFi or some other risky small cap stock, right? You're gonna do that? You're gonna put 500K into one stock and get the exponential curve? I don't think so, right? You're probably gonna be diversifying your portfolio like everyone else, right? You're gonna have maybe some risky, but probably a lot of conservative stocks, maybe some dividend stocks. They're real conservative. You know, you get a yield on your position, and maybe your position value goes up. That's great, right? But that's gonna take a long time at 500K to get to 1 million, all right? It's gonna take years. It's not overnight. Now, on the flip side, let's talk about the person who's got only $10,000 invested in the stock market. Now, that person who's got 10K, it's probably somebody in their 20s or 30s, right? So in your 20s or 30s, you probably have less liabilities. Maybe, right? They may not always be the case, but let's just assume that you have less liabilities. Maybe you don't have kids yet, but you got 10 grand in the market. You're gonna stick your 10 grand in the boring S&P 500 that collects 8%? No, you're gonna stick it in some risky, high beta stocks so that you can get that 10x momentum up to 100K. So, which is easier? And you can lose 10K, right? No big deal. You can recover from that if you're young. If you've got 20 grand, 30 grand, or 10 grand, right? You can recover from that. Even if it's a total loss on a risky stock, you can recover, right? But someone who's got 500K, that's gonna be a lot harder to recover, right? So in my opinion, it's the opposite. It's easier to go from 10K to 100K than it is from 100K to 1 million. It's easier mentally, and it's easier with the type of stocks that you can buy. because you're not going to buy these super crazy beta stocks. It's just not going to happen. You don't see Warren Buffett out there buying every small cap company he can find. He's sitting on $325 billion in cash. He's not out buying these high risky, high beta stocks. He could just buy the whole company, honestly, right? That's Warren Buffett for you. But again, it's easier to go from 10K to 100K because you can take the risk, right? You don't have to invest in the S&P 500 unless that's the only thing in your 401k. Now, sometimes that is the only thing, and you might need to start a brokerage account on your own and do some after-tax dollars and invest in some stocks. Go ride some big waves, okay? So all these YouTubers that have this BS little chart, exponential chart, it's garbage. These YouTubers, they haven't been in the markets for 20 years, like me and all the other guys out there that have been in the markets for 20, 30 years, all right? They got all their money from YouTube. They got a bunch of views by BSing you into this exponential curve, this pipe dream that everyone has. All right, let's see somebody hold 500K into a single stock. You ever done that? You know what happens? On a daily basis, you're up 30, 40, 50K, or you're down 30, 40, 50K. Number of days in a row, that can happen, right? I know about it because I'm in Tesla stock. I've got 60, 70% of my portfolio in there. I got over 500K in that stock. Yeah, you think you can handle that volatility to get to $1 million, right? Have you done the due diligence? Have you built up your conviction to ride an exponential curve like that? It's not easy. It's hard. It's mentally, every day, you got to think about it, right? Do you have the conviction in that company or in 2 companies or 3, right? Because that's what it's going to take. To get that exponential from 100 to $1 million, you're going to need to be in some high risky stocks. You know, collecting 8% on the S&P 500 from 100K to $1 million, that's going to take you probably, if it's 8% a year, it's going to be 8 times 3. Okay, 24 years is what it's going to take from 100K to $1 million. You're going to wait 24 years, or are you going to try to build some conviction on some higher beta, higher risk stocks? Again, it's not easy, right? You got to think about this. So, you know, to all the YouTuber financiers out there, you know, I like your guys' content every now and then, but whenever I see those charts, I just laugh, right? Because I'm in it. I'm in that chart. I'm above that 100K. And it's not easy. Every day I think about, oh man, should I diversify my portfolio into the S&P 500? No, I'm not going to, because I'm a big wave rider. I'm not into the, you know, the boogie board waves. I'm into the big waves, right? Now, if you see these YouTubers saying 100K to $1 million, you got to ask yourself, are you ready to ride the big waves? To get that exponential 10x on your money from 100K to $1 million, if you want that exponential curve, you gotta roll with some big dogs, not the little dogs. Now, you can do it with the S&P 500, no doubt. You know, you got 100K in, you just ride it for 24 years, you'll get there. You'll get to $1 million, no doubt. And, you know, to be honest, I think what the YouTubers might be saying is that it feels easy at 100K. Of course it feels easy at 100K. You got 100K, everything's nice when you got 100K in your pocket or in the S&P 500 or wherever you got it. You know, it does feel harder when you're at 10K or 20K, no doubt. But, you know, it frustrates me too that these YouTubers will say, oh, you get exponentially more growth at 100K. No, you don't. The S&P 500 returns the same amount throughout history. It's an average of 8%. Okay? The stock market doesn't all of a sudden return more growth exponentially when you reach 100K. Sorry, it doesn't do that. That's not how it works. Okay? It may feel like more growth because you've got more dollars, but it's not a true representation of pure growth. All right? You can grow an account from 10K to 100K probably faster, like I said. Okay? So, you know, oh, and another thing, okay? When you get above 100K, you know what you have? You've got people asking you for your money left and right. You're a target. You're a target to financial investors, right? For these management funds and all these people, fiduciaries, whatever you call them, they want your money. All right, so you're a target. Now you got to fend off all these people trying to tell you what to do with your money. So you think that's easy too? No, it's not. That's not easy as well, right? So there's a lot of things above 100K that are not easy that no one thinks about. That's no one's even talking about. They just throw this YouTube video out like, oh, you double your money, it's so easy, right? No. It's not easy when you got high liabilities, you're older in your life, you're approaching retirement. There's a fifth thing, right? You're approaching retirement and you got 500K in, you're gonna keep your money in some high beta stocks? I don't know. To be honest, I think the growth rates slow down when you get past 100K. The growth rates go lower, the dollars go higher because you have a higher net worth, right? You get that compounding effect, but the growth rates, they slow down for most of the people out there, right? Not everyone's like me riding these huge Tesla waves that are trying to get that beta, right? That alpha, right? You want that high alpha to get the exponential growth, but a lot of people, that's not their cup of tea, right? So just think about those things. You know, next time you see these YouTubers throwing around these high, fancy, crazy, you know, exponential curves, no, they're not out there. There's no get rich quick scheme. I talked about this in my last video. It's a marathon, right? And you got to be aware of that, okay? Yeah, it's great. Getting to 100K, that is a big accomplishment. And it is hard to get to that, no doubt. You got to be disciplined. You got to save your money, right? It's going to be a hard run. However, you have the advantage. You don't have a lot of liabilities. You can be risky at the 10K, 20K mark. Are you going to be risky above 100K? That's for you to decide. You got to decide, do you have the conviction to do it, right? So these are the things I've learned over the last 20 years. Okay, I've had some big losses over 100K and it hurts, right? Because I've been in some even higher riskier stocks than what I'm in today, right? I've learned my lesson on those small cap stocks, right? I still invest in a few of them, but not as big of an amount. I won't put 500K into the Honest Company, right? I lost money on them a couple years back, right? I'm not going to put 500K into, you know, some, you know, low cap, crappy company stock. I can't think of any stocks off the top of my head, but like Upwork's another one. It's a small cap company. I've got a couple $1,000s invested to it. I'm not going to put 500K into it, okay? Because it's too high beta for me, and I don't have enough conviction to do it, right? That's why the big dogs, they invest in the mega caps, because there's enough upside to those mega caps and not a lot of downside, right? That's why the big funds, they don't go into the small caps every day, okay? So just food for thought on those YouTube exponential curves. I don't know what my thumbnail or my title is going to be, but anyways, some advice for you guys. Hope you enjoyed the video. And if you could, take a look at my previous video. And everyone, have a great day. Thanks for coming. Bye.